Monday morning, folks, and we're back with yet another episode of the FINMET Mondays podcast. We did see a run up to 2430, Sunil, on Monday, largely due to geopolitical issues, but then you saw this $100 drop on the subsequent days of the week within gold. Surprisingly, but though in silver, we saw that 30 level really hold. We didn't see the same follow through selling that we saw in gold. We didn't see that in silver. What do you make of that? Why was silver able to hold above that 30 support level?
Yeah, silver has been very well supported, which is quite a surprise for the market because I think the market would have expected that we would see a little bit of break because at this levels there's not really that much demand. But it seems that the speculative demand overall for metals is quite strong. Copper is well held up, and also platinum has gone up quite well. So I think overall the flow of money into the metal space has been very good, and that's creating this situation where silver also is supported by investors.
Understood. You've been speaking to a lot of traders in China about the precious metals landscape overall. What have they been talking about? What has been the talk of the town recently?
Mm. So in China, the basic issue that's happened is that the background is that the currency has been weakening,
Mm,
and the confidence levels on the local currency in the renminbi has been weakening. So the people expect the currency to weaken, and therefore people want to invest in something which will hold its value
mm,
against the renminbi. And since the precious metals are valued against US dollar, and it's quite easy to buy precious metals. What we're hearing about is there's a lot of investor interest in buying precious metals, and that's platinum, silver, and of course gold. Gold imports in the first 3 months, the first 3 or 4 months are almost equal to about 500 to 600 tons, which is what India imports in a year. So you can imagine China is really going gangbusters in terms of gold imports. That normally does happen because it's front loaded in the first year with the Chinese New Year. But this year demand has been quite robust compared to the last 3 or 4 years. And also silver demand is being great. I mean the normally a lot of Chinese silver comes overseas, but that's not really happened. And the reason that's not happened is because the solar industry is very strong in China, and they consume silver. So the story really is of Chinese buying, which is quite one of the reasons maybe why the precious metal space is so well held up.
interesting. Interesting. Thanks, Sunil, for that insight. Let's quickly look into the technical outlook for the coming week, what the markets are saying about gold and silver. So, firstly, Sunil, we have a holiday on Monday on account of Memorial Day in the US. So, that will be a trading holiday. Indian markets will be open, however. Coming to US spot gold charts, we already know we saw this $100 drop on two successive days. Now, last week, I had pointed out that there was a resistance here around 23, 2480, 2490. This was produced by the confluence of these two black lines that you can see that are converging over there. And I had said that you may actually see 2490 being tested and then a pullback taking place. But we know that the FOMC minutes that released on Wednesday was severely hawkish, and that I think is going to continue to play into the coming week. Where we are right now is around 2330. We have a support here at 2275, which is the first major support, and below that we have 2222. On the upside, resistance is at 2398, and 2450, the all-time high, remains as a second major resistance. On the 4-hour chart for US spot gold, when we look at these two lines here, the two lines here, the red one is nothing but the 20 moving average, and the orange line here is the 50 moving average. Over the last 2 months, you've seen a very obedient pattern between these two lines. Whenever the red line has sunk below the orange line, there has been a sustained period of corrections. And that's something that you see again happening right here. On the flip side, when the 20 average has been above the 50, you have seen markets being able to kind of cross that threshold. So this has been something that was peculiar with respect to not just gold, but also silver. We also see it on the silver charts. For that reason, I do believe that we are in a slightly consolidation slash correction phase. Whether this remains a long term correction or this is just a temporary pullback before another swing high back to 2450, that would remain to be seen. Coming to silver, this, in fact, was a line that I had drawn last week saying that we are going to see a correction from 31.6 to 32.8, and that's exactly what happened. Now, this 30.2 support level is where we are saying markets have paused. This level is going to be tested this week. Silver may not have the momentum to be able to hold above this level, uh, especially given that we also have a very thin economic calendar this coming week. So a lot of what happened last week, the minutes, the hawkish minutes, the positive economic data, that will weigh on investor sentiment this week, and you may see a slight pullback in the metal further. So beyond 30.2, the 25.9 support level is called into action, but there is a sizable area between these two where you might see the metals just settle before rising back again. The only main key economic indicators are: on Tuesday, we have consumer confidence, we have GDP numbers on Thursday, and importantly, on Friday, we have PC inflation, which would be the main ones to watch out for. But overall, given that we have Monday off in the US and we also have a relatively shorter trading week, we're not going to see much action on the economic front. So a lot will be governed by what has already taken place in the markets. Finally, as we always recap, the percentage probability of an interest rate cut in the month of September has is somewhat stabilized around 53%. I think this also kind of conveys how the markets are perplexed in terms of what is the Fed really going to do. 18 September is when the first month of interest rate cuts are being estimated for, but you can see that very well this might extend up to November, where the probability is actually much more higher, around 77%. Let's see how the markets play out. But till then, thank you so much and goodbye.